So for today, let's look at the third step.
Mm,
So for this whole week, we've been looking at uh, three steps to understand how the market move, or three steps we can follow to be able to frame a trade. And the first
mm,
step is that we establish who is in domination. To do this, we said that we must ask ourselves, what is the trend of the market? And as we know, the market can be trending up or trending down. And the market could also be choppy or consolidating or moving sideways. But in terms of trending markets, we will be able to understand either the market is trending up, which is a bullish market, or trending down, bearish market, by using the footprints of the market. The footprints can be seen or are characterized by the structure of the market, which we can view as high points and low points on the chart or on the market in the market. So there are highest or higher high points and lower high points, lower low points and lower high points that we can always find no matter the time frame we are using. This is what will guide us to be able to understand the structure. Okay, so in a bearish market, we said there should be lower lows and lower highs dominating in the market. And in a bullish market, there should be higher highs and lower highs dominating in the market. And we will know if the trend is changing or the direction of the market is changing, for example, from a bullish or uptrend to a bearish or downtrend, only when the last lower high for the uptrend has been taken out or has been invalidated. Once that happens, it's it can give us an indication of the idea that the market is likely trying to change direction. Okay. And then we said that for the trend to be stronger, you must use a combination of time frames to confirm that at least 3 to 4 time frames must be saying the same thing. So let's say if your
mm,
daily time frame is bullish, weekly is bullish, 4 hour or 6 hour is looking bullish, which means they have
mm.
bullish structures, higher highs and lower highs, higher highs and lower highs. If you have about 3 time frames aligning, that could be a good start for you to establish who is in domination. The second step is to be able to find or define your area of interest or value. To do this, you would want to find
Mm.
the most current swing structure, which is the most current, if it's an uptrend, a lower
Um,
high and a higher high. Okay. And then you would want to look for either discount or premium zones within this 2 points or range. Okay. And then within a discount or the premium zone, what you want to do is to look for areas that can be said to be psychologically compelling for
Hello, sir.
participants to engage. Yes, participants to engage in the
Hello.
market. So those areas, and I said that some examples of concept that we can use to identify those areas, some of the simple concepts could be just demand supply zones or support resistance zones. And we introduced ourselves to the concept of precision support resistance, which is a support which is within the support resistance zone, but this time we refine it to be more specific to a specific price or close um, or a certain price levels that have both been used as resistance or support. Okay, and that we explain that for for support levels or where you find your PSR, um, you would want to see that there has been about three touches at that place, or price has made reactions or impulsive moves from or off those support or resistance levels. And these are the things that you might want to see in your area of what interest. So we showed all examples of these on the chart. We will get to it to put all together today to step three, which is what we are going to focus more on for today, is to find your entry signal or confirmation. For this, you might want to pay attention to the area of interest, and you want to see within the area of interest an indication, correction, and either continuation or reversal. Okay, so you want to see an indication. Indication is market revealing its intention, giving you the initiative, either a push up or a push down or a break out of the value area. Then you look for correction. The correction is like a pullback, okay, pullback or retracement, and then it's either price will go for the continuation or price will give you the reversal. Okay, so um, inside the area of interest, it is important for you to see a morning or evening star formation. And let me ask this question. What is a morning star formation and what is evening star formation? Does anyone have an idea about this? What is morning star?
Morning,
Mhm.
morning star, there are three candles. What I don't, what I master is the bullish engulfing, bullish, bearish engulfing. That morning star, I don't really master it.
Okay, does anyone on the call have an idea about that? What do you know about morning star, evening star?
Morning star is a bullish pattern. That there are three candles. The first one is the bearish. The second one is indecision, and the third one is a bearish for morning star.
Okay.
It's a bullish that covers, I think, half of the bearish candle, something like that.
Um, that's all right. Let's look at it. Morning star, evening star pattern. So what is it? So it looks like evening star is when you have three candle patterns, and this could be similar to or the engulfings. Okay.
Mhm.
Um, when you have this kind of pattern, and you could see um, like in a bullish market, you see one big green candle, and then you see a small either green or red candle,
Mhm.
okay? And then
Mhm.
um, you see a red candle that takes off to engulf either all of the last green candle or either a good percentage of it, either half or all. Okay.
Mhm.
And
Mhm.
people have said it doesn't really matter the color of the doji, the color of the small candle, which would be at the top. But um, yeah, so this is the way it looks like. But what I want us to learn from here is that this pattern gives you an indication like a higher high, because if you look at the high of the bullet, let's say we are using the first um, option here as an example, even all of them, you can see The first bullish candle, the big one, makes a high, the high of
Mm-hmm.
that candle. Then the doji makes a higher high.
Mm-hmm.
Then the red candle, bearish candle, makes a lower high. So
Mm-hmm.
the morning star, evening star, this is evening star, morning star formation is going to give you um, a low, lower low, and then lower high. And then the bullish example that we are just seeing is going to give you a high, higher high, and lower high. Do you get that? So that
Yes.
is what I want you to put in your mind. Okay, when we
Mm-hmm.
talk of morning star formation, evening star formation. Okay, so we know that evening star is the formation that could cause a bearish reversal. Okay, and then the morning star could cause a bullish reversal from what we've seen just on Google. But what I like you to learn about that is that all of them have a certain pattern. You can see in a bullish situation, you can see a higher high, a high, sorry, higher high, and then a lower high. And then for the bullish pattern, you will see a low, lower low, and then lower high. So for the bearish morning star, the evening star, you will see a high, higher high, and a lower high. The morning star, you will see a low, lower low, and then lower high. Okay. So we will get into this again on the chart, but it is important for you to see morning star or evening star formation at your area of interest. So this time you know you are already at the level where either buyers or sellers are reacting or they are active there. But when you look at the candles closely, candlesticks, whether daily time frame candles or 4 hour time frame candles or 1 hour, you might want to see either a morning star or evening star formation. And that is giving you the idea that you should look for either a high, higher high, lower high, or a low, lower low, lower high. Okay, that's what you should be looking for. Then the next step is you also need to see rejection candles or engulfing activity. So, what is rejection? Rejection is, let's say, if you have a 4 hour candle and the 4 hour candle moves up and it hits a certain level, or let's say resistance, or hits a certain support level, and the 4 hour candle has not closed yet, but uh, it hit that level and then it starts pushing up. The thing, let's say the thing has been selling, and then you can see the body of the candle was very big, okay, and then now it hit a particular point and then it starts shrinking, pushing up, leaving a shadow or wick. Okay, when you are seeing that, that is what we call rejection. And if the candle closes with a wick, then fully we can say that that candle has rejected. So you want to see rejection, okay, rejection candle. And you want to also see what we call the engulfing candle. Engulfing is when there is one candle that closes and another candle opens and is able to move either up or down to take over or overshadow the previous candle. That is what we call engulfing. Okay, if you have any question, you can let me know. Then the next step is you want to look for either a head and a shoulder pattern. Okay, and that is very crucial because I'm saying this because in the market, anytime the market wants to give you, let's say price has been going up, up, let's say it's been buying, then you got a pullback. Okay, so there were some sales. If the market want to continue giving you the buys, do the continuation, it's either it gives you a double bottom or triple bottom for the buy, or it will form
Mhm.
a head and a shoulder pattern. The head and the shoulder pattern is a reversal pattern, but in this case, because we are expecting the continuation, that will be formed to give you the continuation. And also, when the market has been buying, and gets to a level, and then it wants to change the direction entirely, it might give you either a double top, triple top, or most times a head and a shoulder pattern. These patterns are very, very, very crucial. Okay, it happens all the time. Anytime there has to be a reversal, you want to see, or it will form something like a head and a shoulder. The market will not always move in a V shape or U shape. No. If it moves on a U shape, it will always go back to form the other U to become W or M or head and shoulder. And the head and the shoulder pattern is the same or similar as morning star, evening star. Always you see the head and the shoulder pattern giving you a high, higher high, lower high, or a low, lower low, lower high. Okay, the head and the shoulder pattern. But this time it's not just like three candles giving you that pattern. Okay, the head and the shoulder can be a group of candles that will form the high, a group of candles that will move to form the higher high, and a group of candles that will move to form the lower high. It will not just be three candles, single candles. Do you guys get my point? So you want to
Yes, sir.
see that pattern, and that is very, very, very crucial. All these things you must be seeing them at your area of what interest.
Interest.
You have already seen your area of interest and you want to be seeing some of these things. Now, um, the last point is your PSR, which is the exact support resistance line or the area of interest that you have marked. After seeing all these things, your area of your PSR, before you enter the trade, your PSR must have confluence with sorry, um uh sorry, let me see. I think I'm not seeing this words well.
Oh,
Okay, do you guys see? I think because of the design I'm using, I'm not seeing all the writings well. um but what I wrote here is that
the one in which color? Green.
green, yeah, the last one, I think there
Yeah, they
should be
say
some
the
some
PSR or area of interest enter
no,
trade
it's wrong.
with.
There should be some words above before it got to that, but um,
Mm,
allow the trade to play, but manage it based on the market reaction. Yeah, so after you enter your trade, allow it to play. But when you
mm-hmm,
see the market is giving you different reactions, you must make
mm-hmm,
decisions based on the reaction. Don't just leave the trade because you entered and then say
mm-hmm,
that okay, you should play. No. If you see that the market is giving you different reactions that you don't expect, you must take decisions. Okay, and you will not always get what you want, so you have to be tough. And no, I don't think this thing gave me all the things I need. There are a lot of information there that it didn't give me. Yeah. Let me see if I can change there. Okay. Yeah, so once there is a um, momentum or volume, okay, there is
mm-hmm,
momentum or there is volume above the value area, sorry, above or below your PSR or area of interest, enter the trade. Yes. Okay. So after seeing all these requirements, once you see that there is momentum, like a big candle breaks up or moves and goes either above or below your PSR, you can enter the trade. Okay. So take a screenshot of this um, to catch all the things I wrote. And let's get to the chart to put into practice step 3. And then we see how we can combine everything. So all of you keep the point, um, keep the point. I'll be asking what next, what next. So let's go right into any question up to this stage.
No, sir.
Okay. Who and who do we have today? Okay, Miss Uche is here. Okay, good. I think most people are busy today. Um, but let's see what we can do. So today I want us to use BTC USD for our studies today. Yesterday we used GBP USD. Today I want us to use BTC USD. By the way, um the the GBP USD, the area that we marked from the higher time frame, you see this area when the market couldn't break above it. And so what happened? There was GBP news yesterday. So what you see this move, okay? And why did this reaction happen? It happened at this level where sellers, we all identified that sellers were there. Okay, you could see. So this is where we identified that sellers were here. So it makes sense for the market to get here and then make this kind of reaction. Do you guys see that? Okay. So for this, because it couldn't break above or go above it, so that's where I would say that as long as price stays below this level, sell. Why? Because sellers are active at that level. And when the first time price got there, it reacted. When it came there again, we see, look at the rejections I was talking about. Weak rejection, move up, reject, move up, reject, move up, reject. Then you see this red candle. That's what we call engulfing. Price engulfs it. Okay. And then if you look closely to the whole pattern, like this whole pattern, okay, this whole pattern is giving you something um like a high here, a higher high, okay? Price is giving you a high, kind of relative equal highs here, okay? And then price breaks this low, it's likely to give us a lower high here, okay? What will be this? Evening star. And this also is like head and a shoulder pattern. So the market is likely to sell from this supply, okay, from this fair value gain. It's likely to sell down. It can also fail because it is the general trend of the market that is going to win, the overall trend, the higher time frame trend. Just because we are seeing this reaction from here and head and a shoulder pattern doesn't mean it's going to succeed. Okay, it doesn't mean it's going to succeed because it is the bigger trend or the bigger time frame that is going to succeed. But at least this